Hello traders, it's 8:01 a.m. Chicago time on a frigid, dark day here. If anybody wants to host me for the next 6 months and you live in a very warm climate, just reach out. Thanks for joining me again for another Trader Bite. It is Thursday, the 15th of November, 2018. Believe it or not, we're halfway through the month. And don't forget that next Thursday is off. It is Thanksgiving weekend in the United States. Things will start to really taper off Wednesday morning and pretty much dead through Thursday and potentially Friday, although Friday has been pretty decent the last couple of years. I will not be trading on Thursday or Friday, but I'll be here to grace you with my wonderful presence Monday, Tuesday, Wednesday, and back to normal on the following Monday. So that's how things are shaping up. Yeah, I'll pass on Michigan, thanks. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's take a look at the overall market sentiment this morning. Market's just not moving off of its closing prices yesterday on the indices. The Dow is down 3 points, 2 points, 3 points, 2 points, 2 points, 3 points. The S&P is down 2.5 points. The Russell's down 2.8 points. The DAX is off 38. The stocks are down 16. The NASDAQ is up 12. Allocation is very mildly to safety. We see crude getting a bounce. Crude got its first close, its first positive close in about 2.5 weeks yesterday. We've had negative closes every day for the last 2.5 weeks in there, and yesterday it's higher, and it's higher today. Crude is up 45 cents or 80 cents. I filled up yesterday here in the city of Chicago for $2.50 at Costco. So that just made my day. So anyway, allocations to safety, clearly the cable is off. The cable, there's just a ton of chatter. The cable's off by 1.87%, which is quite substantial for a currency. There's a lot of chatter on Brexit. There's just a lot of disagreement and a potential no confidence vote against the prime minister and so on and so forth. Some instability pounding on the cable there, pounding on the pound. So let's move on, as my jokes are really horrible. As far as what we're looking for that would interrupt our session today, really we have business inventories. This is a prelim number. It moves more than the final. That's at 10 o'clock for September. Expecting 0.3. Not really a high importance figure. Today we also get natty gas at 11:30 because of the Monday holiday, and we get DOE crude oil inventories at 12 Eastern because of the Monday holiday. There's a slew of central bank speakers. We already had ECB Speaker Kerr. We had Prate at 8:10 Eastern. At 9:35 we get ECB Speaker Guindos. And then at 10 we get Fed Speaker Quarles. And 11:30 we get Powell, so pay attention. And then at 3 o'clock Eastern we get Kashkari. So there's just a lot there. These guys have not been moving the market around much. It's more the U.S. president and the cabinet that have been doing that in terms of news. So this is where we stand. Let's take a look at what we expected yesterday versus what we got. Now, I don't know about you, but it definitely isn't. Whoa, what's going on? Oh, okay. It definitely isn't as easy to pick off what's likely to play out. The market is testing pretty heavily on both sides. Volume is higher than normal still, and we are kind of fighting our way into finding a bottom, or when we're advertising higher prices, there's a tendency for sellers to step back in with confidence. Yesterday had some really excellent swings. I know I say that, and I'm kind of cringing a little bit because my excellent swings could be your worst day. So it depends on time frame and style and so forth. But for my way of viewing the markets, yesterday had some really good swings in it. So this is what we expected. The primary scenario was responsive down into 2750, all the way down into 2250, the point of control. And then I was looking for it to rotate and actually breach the one-time framing down, and it failed to do so. I was looking for a breach of one-time framing in either case, given that we were moving closer and closer to 2700. However, the alternative plan is for it to push higher and then down. And I talked about open test drives and how we don't fade those. And I had said for scenario 2, expecting a potential inside day. But if we drift through the low, then we are likely, to push into 2691 below. We ended up pushing actually a little bit farther down. Here's what actually happened yesterday. Just really nice swings. The stock zones were really outstanding yesterday in terms of areas to interact with the market. We pushed higher early, down into the prior day's close, bounce up into mid, and then continue lower to extend the IB. The IB low. First we got and bounced at the point of control, 2722.50 is expected. And then after a tiny bounce, it dropped right into the prior day's close. Small bounce there, falls through, and then we have this big chop. Look at this formation here on the 15-minute little megaphone that resolves itself to the downside. During the megaphone, I was issuing these caution shorts as I was seeing the potential for basing for rotation back up, and it just kept dropping. And then we finally test the century figure at 2700, and of course we chop around that figure, and we finally get down into the bigger target down below 2691 and extend down to 2686 and a quarter. And then we get the bounce after that. So once we get down here and put in this hammer, we start to see a bid. We start to see a little bit of an aggressor. You can see the aggressor down here. So the hammer gets put in. You can see that the delta is not with it. And then we start to see an aggressor on the buy side. And then and I think I put it in our chat room, that expect it into the prior day's range, which is at 2714. The mid was 2717, and it ended up pushing right back to 2722.50 by a point, the prior day's point of control. So again, we have lower high, lower low, lower high, which is all we need for a one-time framing down, day-to-day trend down, lower low, and we're back to 2700, and currently we're trading and extending the low to 2687.75. Here's what the overnight looked like. If we extend out and look at the overnight and what has been done here, it becomes kind of obvious that we just, what happened to the data here? Something's wrong with the data. Looks like the data didn't load properly. Need to reload this data. But overall, it's just the downswings are much more aggressive overall in the overnight. This is not very useful. But let's take a look at what we have in terms of the overnight session. In terms of the overnight session, it just seems like through the Asian session, we went sideways. The Europeans came in right here. Again, as we talked about in the prior sessions, the Europeans, just like they did back here, Europeans come in, buy, and then eventually it just tops out and it starts to rotate down. It did so in the European session, whereas yesterday it was buy, all the way into the open, and then the open came in and sold off. A big part of my expectation for a push through the prior day's high is how the overnight was trading. The overnight was clearly rejecting the low, and today we're clearly moving towards it. I mean, this looks like news right now, the way it's shifting down here. Let me scan my news feeds. So these be. I'm not seeing anything on the news, but we're really extending down. We're finally taking out yesterday's low. This is really a market that's just not able to find buyers. We're still struggling to find buyers even at these cheaper prices, and as long as we struggle to find buyers at cheaper prices, we are going to advertise prices lower. Unfortunately, this was a really nice move down here. I mean, look at how they're hitting the book. Check this out. So we swing up, swing down, we get some absorption, bounce back up, and then this kicks in, right? This strong bid. The strong bid remains in place. We get a collision, and generally, if we break through, we pull back to that collision as we did here, and we continue lower. Collisions are really important as our liquidity pools. And so overall, it just doesn't look like it's able to pick anything up. We're forming some okay zippers down here. Zipper. It's really trying the base, but it's not able to find the buyers to keep it afloat. So still a seller's market. And so we're going to be aggressive on the sell side today, more so than the buy side, unless things change, in which case I'm happy to change my opinion as well. So let's look at what we're expecting today. What we're expecting today, this changes things. In fact, the way it's moving right now is really changing things. But it looks like we might open a little bit lower, probably open below this 2680 area. Looking for an open auction response back into 2694, 95, impulse down, and then start to work its way down into the CLVN down here. Target becomes 2650, 2647 if it's going to continue lower. This is how it's running. This is actually my secondary scenario now becoming primary. Not seeing anything on my news feeds. Chief advisor to Italian Prime Minister says if the league... not seeing anything on my news feed here that would lead me to believe that there's some significant news.
Overall, we're seeing risk-off barometers continue to tick up.
Something about 48 letters going in and the no confidence vote coming out on the UK Prime Minister, but not seeing anything significant here, just rumors. Otherwise, we have an open auction that open test drives lower, so we have an impulse lower, and then we get the response, get back into yesterday's range, and then start working our way back through the 2700. Lots of noise at 2700, and then make our way back. If we continue, we can make our way back to 2727 back into balance. So what we've done is we've come down from 27 from above to 27.27, the most traded price by volume for the whole year. And we bounced off of it a little bit, bounced around in it a little bit, and then yesterday we tested from below and we're continuing lower. So once we lose that high volume node, the MC point of control, we start to move to the next low volume node. The next low volume node's here, which we've already done, and the one after that is 2650. So that's how things are shaping up. There's a higher probability today of an open test drive type open. We're opening out of range, away from balance, and it could be an open test drive down. So open test drive up, actually. Open test down, drive up, or open test up, drive down. Again, hands off for the first few minutes and let it set up before you pop in and stake your money and stick your neck out. I'll leave you with that. Let's get back to watching the markets here and trading. Good luck today, and I'll catch you tomorrow. Convergent traders, we have our Trader Mindset November session for today at 1 p.m. Eastern. The invite's in the mail in the next few minutes. Good luck.